So as we start today, I'll give you a heads up on a couple of things here. With the Fed stuff, there's a couple of things we will have to update as we go, because as you can see, I'm back a little bit further, and some things have changed slightly since then, not a ton. But okay, federal income tax. First things first, collected by the IRS. You've heard of them before, but again, that is the Internal Revenue Service. On the annual earnings of individuals and businesses. So, and again, yeah, it goes for businesses too. So, when they're raking in some of their money and stuff and giving you some money for working for them, they still got to pay the feds too. So it kind of is, different with what we go. But this is always done on what's called a graduated scale, like we looked at yesterday with taxes, where the more money you make, the bigger chunk the government is going to be coming after. So when you're doing all of these things, okay, we've talked some about withholding. What types of things to your federal income tax withholdings depend on? Well, let's see. How much money you make, your income. It depends on marital status. Are you single? Are you married? Even if you are married, again, you can file separately depending on, how much money you and a spouse could make. And your allowances. We also call those dependents as we go. You get to write yourself off. You get to write your spouse off. If you're filing jointly, you get to write off children or other dependents that you have. So, again, those withholding allowances are people you support financially for at least half of the money they have. Now that comes into play because if you have like your 23-year-old son living with you, but they're working full time and making all their own money, that's not going to be a withholding allowance. That can't be a dependent. But if you've got I'll say it, if you have your 25-year-old son living in your basement playing video games all day and making 5 cents, then yes, you can still write them off and get a little bit back for all the money you're spending. Okay? Now, hopefully that's not the case very often, but that's kind of where we're going as far as the withholding allowances go, those people that you support. So notice with the feds, there's a lot more sections to this than there was state. State, you're normally, if you see 3, that might be about it. Feds, we got 1, 2, 3, 4, 5, 6, 7 that we go anywhere from making your first dollar to making over $500,000. And this is why you always have to pay attention to the income tax rules, because there are some politicians right now that would like to make another section after this where the next percentage would go to somewhere between 50 and 70. So at that point, I would just stop making money. But that's me. Currently, though, as high as we go is 37. So, like we also had before, now, whether you're single, or whether you're married, or whether you're married filing separately, or you're the head of the household, it all is going to make a difference on where those rates go. So there's a lot more in play here now than just, I made up to 10,000, it's 10%. I made up to this, it's 12. You really have to pay attention to some of these things because the numbers all change. So we want to make sure, I'm going to kind of bend this page over and earmark it, because we're definitely going to need to refer back to this some as we get rolling. So you're like, okay, that's a whole lot of stuff going on. It is. But here's the good news, okay? Within the last 10 years, the actual standard deduction for somebody, the amount of money you get to keep for yourself without being taxed, has more than doubled. That's nice. Okay. The government doesn't always screw this up. So if you're an individual filing taxes, the first $12,000 that you make, you get to keep back and not hand off. That's kind of nice. If you're married, it's double. And then for each dependent you have, they're worth $1,100, and there's some other deductions too. We're not going to get into those, but some other ways we can save some more money there too. But the way we're going to go about doing this is exactly the same as state. There's just going to be more layers in play, let's say. So for instance here, Samantha's gross income, before we do anything else, is $91,300 a year. Okay. She is married filing separately. Okay, here's where I got to be careful. Married filing separately, you're not taking the deduction for married because that's assuming you're working with two people. She would take the individual one here because it says filing separately. So we got to read carefully. And has one dependent, which is worth another $1,100 off. Calculate the federal income tax that she must pay using the graduated schedule. So we're going to take her $91,300. We're going to add her deductions together here. Ooh, that's bright. Hang on just a second here. Let's try and bring this back down a little bit. So $12,200 plus $1,100. So we're going to subtract $13,300 before we get rolling here. So that $78,000 is what we're going to work with as our taxable income. So, once we get here, now we start looking to see how this is going to work. And sometimes, depending on how much you make, like if you were someone making over $500,000, there would be a tax calculation for you at 1, 2, 3, 4, 5, 6, 7 different levels. Oof, duh. Why we got to make this so complicated? So, just like we did yesterday, we're going to be like, okay, so first things first. Married filing separately. So, at the 10% rate, we've made the maximum here. So my qualifying earnings would be $9,525 times the tax rate at that rate, 10%. We'll multiply those together. If I can squeeze this in, apologies for some of you watching later that I'm moving this back and oh dear. Got to get the decimal in there, Hardy. The government is getting 1,000% of my money. No. How about 952.50? Okay, that's a little better. 952.50. But unfortunately, that's not all. So we jump to the next one. We're like, okay, so the next one is at 12%. So let's come back down here a minute. So that takes me up to $38,700. Now, that doesn't mean that I put $38,700 here. You're like, wait, why not? Because I'm going to take that $38,700 and I'm going to subtract the amount I've already paid taxes on. See why so many people want to use software or tax professionals? I'm telling you, people. So 29,175 is the next area. And to be honest, I wish they would make the charts this way. You know, here, now, right, like the next 29,000, you're paying this, but they don't do that. I don't understand why, but... So here I owe another 3,501. Again, taking this number times the 12%. You're like, oofda. We still going, Hardy? We are. We're still going. Because now I look at the next chunk, and I'm like, okay, this is going to be the end, because I didn't make over $82,000, just to here. So now, the last rate, oofda, is 22%. So now how do I figure out what goes in here? Okay, I've already paid taxes on these two. Now, I'm going to show you something, and you're going to be like, oh yeah, that kind of makes sense. I've already done this, and I've already done this. Oops, what did I do? Oh, I put times and added together. Okay. Okay. So far, I've done 38,700, okay? So now I need to take my total, 78,000, and subtract that 38,700, okay, the amount I've already paid tax on. So there's me minus what I've already, oops, I got to get in the screen here again, don't I? So $39,300 is the amount left that I have to pay tax on at 22%. Like, dang. They're like trying to take all my money here. Yeah, it just like I said, it just gets worse the further you go up the scale here. So 8,640. I just looking at something. Yeah, sure. So 8,646. And now we get the bad news. Add them up. You start getting towards the end of the year and look at your paycheck for the amount of taxes you're paying. You're like, oh my gosh, I want to cry. $13,099.50. That is the tax I owe if I'm making $91,300. Oof, duh. So just like we've been doing, Samantha gets paid bi-weekly. Again, every week divided by 52. So 52 divided by 2. That's where the 26 is coming from. Divide that by 26. And we're popping out $503.83 every 2 weeks to the good old feds. Hi, feds. Hi. So the biggest part with this is just making sure as you go from one step to the next, you're always going to take either the biggest number in the chart, depending on which one you're doing, minus the prior to keep seeing those values go. Or if you get to a point that that bigger number is more than you're being taxed on, that you use that number minus. That's why we want to keep doing these as we go. So let me do this. Am I going to do it this way? I think we are. I think it's a good idea. I want to do one more with you. You're like, you're going to leave us with one? I'm going to leave you with one. We'll re-hit this up next week again, too. So, all right. Mike's gross income is $72,000 a year. $72,500. I don't want to rip off Mike. He is single. Okay, so Mike is single. Let me look back here. Mike is single, so he gets 12,200 for being single. And he has 2 dependents at 1,100 each. So again, I'm going to add those 2 together. And do 72,500 minus that number. So 72,500 minus 14,400. Can't try to take that extra 40. Okay. That is my taxable income. So this is when I start using the chart again, which I have a second copy, so we can kind of not have to flip back and forth quite so much. Now, am I going to be able to fit it in? Yeah, we're going to do okay. Okay, so we're in the single category. So, I'm like, all right, let's get this going. So 10% is first. For the first 9,500, we made more than 9,500. Times 10%. And what you're going to find, if you look back and forth between single and married but filing separately, they're exactly the same until you get up to the 35%. And I have dug and tried to see why that is different, because I find that's kind of strange, but I haven't been able to find any good info on it, so I can't give you an answer. So I get that first tax. And so now I get in. I go, okay, am I going to get all the way up to 38,700? I am. So just like we did before, we're going to do 38,700 minus the 95.25 I already did. You're like, this kind of seems eerily familiar. It is. We've got that 29,175 that we've got to pay at the next tax rate. Okay? So again, we're always figuring out how much of a gap there is between what I've paid already and what's going on here. These numbers on the right are a big key for us. So I multiply that 29,175 here. There we go. Times 12%. So there's my next big old chunk that the Feds are going to be taking. But then, when I go to the third one, that's 82,500. I didn't make that much. So now instead of doing 82 minus, I'm going to take what I made, 58,100, and I'm going to subtract the last number. It's always that second number that we're subtracting as we go from step to step. So, let's see here. So I owe my 22%, oofda, on my last $19,400 here that we got to work with. %. Yuck. 42.68. No sense. add them suckers up. Oofda. $8,721.50. There's my tax withheld. Oops, off the screen. And again, if Mike gets paid monthly, that'd be 12 times. I'm going to take that $87,21.50 divided by 12. Fed's coming for $726.79. Oofda. And we're set. So you're going to have one last one to do with June here. Kind of play through that, see how it's working. Get that done. The one other thing I want you to play with. You're like, holy charts, Hardy. Okay. This is a little different. I want to take a minute on this. So what is this? This is the average amount of tax paid by income in the U.S., okay, 5 years ago. So you're like, okay, so what difference does that make? Quite a bit, because it kind of, I'm hoping, would open your eyes to a lot of things. There's a lot of things out there that are true that you read. There's a lot of things out that you read that aren't. So you look here, if you look at a majority of the taxes that are filed in this country, it kind of goes up to this 200,000 line where there's a whole lot of people. Like there's at least 100 million people there. And then you look below that at 200,000 plus, and you have maybe a tenth of that. But here's the thing. When you look at the average income that they bring into the federal government with their taxes, you know, anywhere from 134 up to like maybe 5, 6, 7,000. So you will see a lot of people out there screaming, make this fair, tax the rich people more. But here's the thing. When you're at 100,000 and paying $7,000 on average, that's about 7%, okay, of what you make when you're making less than 100,000. Let's come down a little further. Okay, somebody that's making 10 million or more, the average tax they're paying is almost 7 million, which is 70%. Okay? That's not, if it's unfair to the people down here, if anything, not the people up here. So again, it's worth digging into and seeing where is most of the tax coming in America from? Right here. Right here. It hurts us some up here, because I'm part of this group. But again, for somebody to say they're not paying, it's, oh, they pay a lot. So what I want you to do to kind of be able to check into this a little bit more is the questions that are down here just talk about, again, number one, being able to read a chart, which is important, because you can make data say anything you want. I can make a 60% on a quiz look great. I can make it look awful. It just depends on the wording and how I do it. So just kind of look, read these. If you're kind of confused on what I'm asking, ask. I'm absolutely willing to help on some things. But take a close look at where the taxes are, who's paying them, and especially what percentage they are. So with that, I will